Good morning, and I'm Samantha Woon, and today we have our guest David Kuo, founder of Smart Investor in Singapore. David, welcome to the show.
Thank you so much, Samantha. Fun and games on a Thursday afternoon.
Yeah. All right. So, David, what are your thoughts on today's moves in the regional stock market?
Pretty mixed today. I think we saw some of the markets up, some of the markets down, and two of the markets closed today for Qingming Festival, which is tomb sweeping over in Hong Kong and China. But in general, I think Asia was trying to get some kind of lead from the US, and the US didn't really provide much of a lead last night. We saw the Dow down, the S&P was up, and the Nasdaq was up slightly. So not too much for the Asian investors to try and sort of get their heads around. And of course, we had a presentation by the Fed Chair, Jerome Powell, and I think people were a little disappointed in what he had to say about the future for interest rates. He kind of towed the same line that he's been towing all along, which is that they will be data dependent, and that they are in no rush really at the moment to cut interest rates. So whilst we saw the US markets up slightly before his presentation, the markets suddenly turned on itself and it headed lower. So it was kind of disappointing as far as the traders were concerned.
Mm-hmm. Yes, he's been repeating that a lot, yeah. Okay, so the US market appears to be losing steam. Have US shares finally peaked?
Well, this is an interesting one. I think the US market has primarily been driven by hopes that interest rates would be cut. At first, they thought it'd be the beginning of this year. Then they pushed it back to about the middle of this year. And now they're thinking that it'll be cut maybe towards the end of this year. But we're getting a lot of mixed signals coming out from the interest rate setting members. And while some of them are saying that, yeah, we're going to be cutting interest rates, nobody has actually sort of definitively said that interest rates will be cut on a certain date. And I think this is giving stock market investors some amount of concern, because they were hoping that interest rates would start to come down. And as we know, when interest rates come down, stock markets tend to go up. I mean, that is the way it works. But when we don't get any kind of definitive signal from the Fed rate setting committee members, then I think the market is a little bit pensive, a little bit wary. Then on the other hand, we have this other driver of the stock market over in the US, which has been AI, or artificial intelligence. And then now there are some concerns about AI. Whilst all this money is being pumped into AI, some of the investors are saying, where's the return? Where are we going to get the returns from these kind of investments? So I think these two things taken together is probably sort of causing some people to think that maybe, just maybe, the US market has run ahead of itself, and that perhaps it is now time to start thinking about taking some money off the table. It is a difficult time for investors, because when we have a look at the US stock market, they are riding at near, if not at, all-time highs. And some investors are saying maybe it's time to take some profit and to leave. But as an income investor, Samantha, I don't really care what happens with the stock market, because I need to go into the stock market to go and buy dividends. And when stock prices are high, I have to pay more for those dividends. When stock prices are low, I pay less for those dividends. But regardless of whether the stock market is high or low, I still need to go in and buy those dividends, because that is something that I desperately need. It's no different to you and I. If we go to the supermarket, we have to buy food for ourselves. We need to put food on our table. And in much the same way, I need to put dividends into my portfolios.
Yeah. Thanks for sharing that, David. So let's have a look at Malaysia instead. So Bursa Malaysia shares are on the tear. Why are Malaysia shares suddenly in vogue?
I wish I knew the answer to that, Samantha. And I think, the simple answer is there are more buyers than there are sellers. I have been investing in Malaysia for the last 4 years. And 4 years ago, I thought that Malaysian shares were cheap and that it should have been on a tear 4 years ago, but it never happened. If anything, Malaysian shares were on the way down. They kept on falling, and nobody loved Malaysian shares. And then all of a sudden, I mean, just in the last few months, people have suddenly woken up to the fact that Malaysian shares do look quite cheap. The dividends do look quite sustainable, and they do look very attractive, and everybody's piling into Malaysian shares at the moment. So it is a simple answer. When there are more buyers than there are sellers, then stock prices go up. When there are more sellers than there are buyers, then of course stock prices come down. But as to why people are suddenly becoming interested in Malaysia, I think is probably the C word, confidence. People are beginning to have confidence in Malaysia, and they're saying that maybe the Anwar administration is doing all the right things. And when you have a look at Malaysia, consumer spending is strong, government spending is good. You always have net exports, which is a big driver of GDP growth in any country. And then finally, you have private sector. The private sector, I think, is beginning to warm to the fact that, Malaysia is a good place to invest. And maybe Malaysia is attracting foreign investments because the Malaysian ringgit is so low. And people are saying, I'm going to get pretty good bangs for my bucks over in Malaysia. So when you have a look at the four drivers, consumer spending, net exports, government spending, and private sector investments, when all four of those things, all four of those pistons are driving the economy, then I think people think Malaysia should be the place where I need to be, which is somewhere where I was 4 years ago. So I couldn't be happier. But at the same time, I am a little bit sadder because I was buying shares a lot cheaper 4 years ago than I am today, Samantha.
Yeah. I guess we'll just wait to look at how it will turn out later in the future. But like you said, as a value investor, we can just look at the dividends that are coming in. All right.
Yeah, quite right.
Yeah, you touched a bit about AI earlier, so let's take a look at that. Nvidia's shares look unstoppable, but competition from likes of Intel and AMD and a host of other players is coming up. Who will win the AI race, David?
I wish I knew the answer to that one, Samantha. I kind of find a very close analogy between AI and, say, Tesla. There was a time when people said that Tesla was unstoppable and that nobody would overtake Tesla. And then now we suddenly see a lot of these Chinese car manufacturers, if not overtaking Tesla, they're certainly giving Tesla a good run for the company's money. And I think the same thing goes for artificial intelligence. At the moment, you're right. NVIDIA looks unstoppable. And I was speaking to a tech expert who was saying that NVIDIA looks to be in a place of its own. But then, how long is that going to last? How long will it be before the likes of AMD, even Intel, Qualcomm, these companies start snapping away at NVIDIA's heels? And I just think, if you are going to be investing in artificial intelligence, you need to go further and further back to try and find who are the picks and shovels of artificial intelligence. I don't think it's the chip makers, because I think that if you are going to plunk your money into, say, NVIDIA, you could suddenly find that AMD will come up with a chip that is as good, if not better, than what NVIDIA has already produced. And so NVIDIA shares will come down, AMD will go up, and you back the wrong horse. So what should you do if you were going to back the right horse? And being a relatively risk-averse investor, I would say it'll probably be the power companies, because everybody is telling me that when you go into artificial intelligence, it uses a tremendous amount of power. And so therefore, why don't I just go for the picks and shovels? Why don't I just go to the energy producers? In Malaysia, you've got things like YTL Power, you've got Tenaga. Over in the UK, you've got Centrica. These are companies that are power generators. And so I think that is probably going to be the safer way to play it, rather than to go and try and pick the winners as to who is going to lead the AI race in terms of chips, or who is going to lead the AI race in terms of, say, software companies. And I think the safer play might be the energy companies rather than the chip manufacturers.
Thank you so much for your perspective, David. All right.
You're welcome.
So thank you so much for your insight. We've been speaking to David Kuo, founder of Smart Investor in Singapore on BizTech Asian Midday Market Watch. I'm Samantha Boone, and this video and podcast will be on our website, www.biztechasia, and our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thank you for tuning in.
Thank you.